Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun. Good grief. Why do I do that sometimes? I really wish the microphone had like a light on it and I could mute it. They make me microphones like that, but this one can't do it. Yesterday, super interesting day. Some big moves, also some interesting stuff going on with their algorithm. I think here I'm looking at it this morning and I'm seeing a bug in it. So we might be doing some debugging today, but we gotta keep an eye on the markets first because we're gonna have some interesting technical setups today now, right? So here we are yesterday. Oh my big, pretty big up move yesterday, and now today, the 25th, pretty big up moves. Hold on a second. I'm missing stuff, huh? Yeah, so here's the S&P 500, only slightly down from yesterday, but pretty much retracing. Well, not quite there yet. I'm concerned that we're starting to retrace some of the deep seek stuff, right? It's kind of starting to show me stuff that I see. Man, I feel like really weird saying this, but it's starting to show me things that I only see at the end of markets. Like bottoms are event, top is a process, and part of it is it starts to do this weird stuff. Oil down towards the bottom of its range. Gold, it's starting to form a range in the top half of that. Silver kind of waning though, not following gold as strongly. Copper getting a little bit of a jump this morning. What's this? Somebody's trying to call me at 6:30 in the morning. Dude, if it's like an Indian recruiter. No, it's my wife. Oh, she was an accident. That's why it was only one buzz. Okay, anyways. Japanese yen still up there. And the dollar weakening a little bit. Okay, so if I come over here and I look, I can see it taking some trades overnight, right? Actually, it cut a good one right there. But it should not be taking trades at night. It is explicitly only supposed to trade between certain hours. So that is broken. And this is another one of those things where it's like, it worked in the back testing. I don't know why it doesn't work now. We're going to have to look into that. It was still like a net profit yesterday, though. In fact, with all of the overnight trading, it's down 3 ticks. So that's not terrible. Or also might get into, is there a difference in the indicators when you are running them on tick replay? Be interesting. Yes. Maybe that's not in the version that I have up there. But none of you have complained about the version of the indicators that I have. So let's start. Ishimoku report says I trade ZTs overnight. Yeah, but your name is Ishimoku. I'm not a fan of Ishimoku clouds. You know, I've never back tested it though, so like, whatever. Yeah, so the first thing is let's do some updates here. Maybe it says short 9.5. Well, it does seem like the trend is down. Kind of close to that buyer side line though. Okay. Anyways. Do you add to your winning trades? You know, usually I've just all in, all out, to be honest with you. Okay. Oh, that's weird. It didn't work. That's funny. So there's still some bugs and everything to handle in the newest version of the indicators, but they're kind of edge cases, and I do think that I made enough changes in these that it's worth people trying the new thing, especially those of you that are trying to run strategies on it. Why not add when you have an implied probability of winning 75% instead of a fixed? Well, how are you determining that you have an implied probability of winning 75% of the time? Like the issue that you get here is that you made 4 ticks already does not necessarily increase the probability that it's going to continue going. So if you go in and you add, it's just adding a second trade. And backtesting these sorts of things. So what I found is that, what I would call pyramiding. It will increase your maximum net profit, but it will also increase your drawdowns. It just doesn't, it doesn't, it's basically a method to take on more risk, but it doesn't actually improve your win rates or anything like that. You know what I mean? It's a gambler's fallacy. It's like the opposite of the gambler's fallacy. It's right. I won, so I should add even more risk to this one trade. Doesn't work like that. Okay, so now the next thing that we're going to do here is we're going to move this indicator over into our free suite because I do think it is worth having. Granted, it's super simple right now, but this right here, oh, I can't do it like that. I have to grab it in here. So very curious that the treasuries are just straight up buying now in quite a strong trend here. Not really very strong volume behind it from what I can see. So, and then I made another one that was like days to expiration, right? Oh, there it is right there. Still going. Let's recenter that. Ah, yes, probably need to fix this, which is that it's going to be in the right space. And that means that this thing needs to include the free namespace. Oops. Okay, cool. Okay. Come back here. Okay, cool. Okay. Okay, so let's go back. No, you don't know what you're talking about. Gambler's fallacy arises from the independent probability, thinking prior event affects the probability of the future event. Well, yeah, but that's why I'm saying it's kind of like the opposite of the gambler's fallacy, right? Because the gambler's fallacy is like, I've been losing and losing and losing, and so this next time I should win. But this is the opposite. This is like, I've won this one time, or at least the trade so far is winning. That must mean that it's, I should add to it, that I can win even bigger. The fact that the position is up already has no influence on whether it will continue to go up. So when you start adding two positions, it doesn't really do a whole lot to like improve the win rate or the accuracy of your strategy or anything like that. It just makes it so that you can get winners that are really, really crazy outsized. But it all just kind of like it all kind of evens out in the end, because then you're going to have situations where you started really sizing up, and then that ended up being a huge loser. All right, let's say you have run thousands of trials to determine you win 70. If you can find me a singular thing in the market that really wins 75% of the times, I'll give you a cookie. We'll start a hedge fund with that if you can really find 75%. Really don't think that it exists. At least not something on a risk adjusted basis. It's almost as if his purpose is to talk people out of trading. Well, yeah. Like honestly, I do not want to talk. I don't want there to ever be a person that is like, I got into trading because of Seth. That shouldn't happen. That shouldn't happen. I am here for the people that have already decided that this is going to be their thing. And then I have a lot of empirical data that can help you. I have a lot of tools that can help you. But I'm not going to be the one that pulls you into it. Right. Again, find me a setup that wins. Where is this thing where the outlay is 75%? That is, in my opinion, a naive thing to say. You might find something that wins 75% of the time if your target is much closer than your stop, right? But then how does that work when you're adding to the trades, right, as it wins? Someone did have a 75% profitable win rate. I don't think that they would... well, oh yeah, probably not. No. You know what, Midnight? I don't like you. And I've gone through this thing with people last week, and I was just like, you know what? I don't have to play these kinds of games. That simple, dude. It's absolutely preposterous that somebody would come in and be like, why don't you come in and bet your entire channel on one person's trade? Are you fucking kidding me? You're crazy, dude. You're crazy. I'm sorry, but we don't have time for that kind of asshattery. We're doing serious work here. All right, so I got the free version updated. So for those of you, I posted it in the Discord, but you can just go to my website, speculatorseth.com/downloads. I've updated both the paid indicator suite and the free indicator suite. And what has been added in the free indicator suite, 3 things at least. The 2 of them are just some really simple indicators that tell you like how many days into the month we are, how many days are left until rollover. And I can do what I want, comrade. And if people are coming into the stream and are saying things that I think are disruptive or stupid or hurt the quality of the stream, I'm just going to remove them. I don't have time to sit and argue with people that are clearly off their rocker. Like really anybody that would be like, "Oh, I can show you a trade." Like let me take over your stream for a day. And then if my trade wins, then you close your... Are you fucking kidding me, man? It's just... I can't believe that anybody would even think that that's like... Do you expect me to take that seriously? But not only that, but what you're saying is just ridiculous. You can't come in and say that like... Okay, here I have a setup, and it's going to happen 75% of the time. Okay. Then why didn't you just size big going into the trade to begin with, rather than getting in, waiting for it to have gone a certain amount, and then sizing up, right? The strategy that you caught a winner on there does not increase the probability of the trade going further. It doesn't. It just makes it so that when you do win bigger, and when you do, and then if you win a little bit and then you lose bigger. So it all evens out. So that's just the way that it works. Coming in and saying all of this nonsense and insulting me and insulting my audience, I don't have time for that. Go away. All right. So what was I saying? Oh, did I explain the change in the free indicators? So one of them is an indicator that just tells you how many days are left until rollover. One that tells you how many days into the month we are. And you can kind of use that to add some seasonality into your strategies and say that like, I don't want to trade this, or I'm going to trade more conservatively or a different strategy when we're getting really close to rollover. And then there's another one that is VWAP typical, and VWAP typical is an estimation of VWAP, but that estimation does not require you to download a tick data series underneath. You try and do back testing with VWAP, you either have to add the tick series underneath or you have to use tick replay, and that makes back testing with VWAP take forever. But if you use my VWAP typical, it's not entirely accurate to VWAP itself, but it's close enough that the difference is negligible, and then you can do all of your backtesting on that. It's like saying you don't size up very big when getting any hand in blackjack, and you only size up to the high probability hands. I mean, when you're doing that in blackjack, that's a different situation, right? Because you can bet based on the card that you get, and you know what the probabilities are, and if it's a better probability, you can bet more, right? Well, because the difference here in this situation is that you getting into a position and the position having gone 4 ticks in your favor or whatever does not tell you anything about the probability of that trade actually working. Right? You get the entry signal, and maybe the entry signal says that this is like a high probability setup or something like that. Why aren't you going to size up right at the very beginning, right? You can size your trades based on the signal. That totally makes sense. What I'm saying is it doesn't really make sense to, or I'm not saying that it doesn't make sense. I'm saying that adjusting the size of your trade after you've already entered into the trade does not improve like your probability or your stats or anything. It's a risk-taking strategy. But I don't know, it's been a long time since I've played blackjack. They give you like one card and you can choose to like raise after you see the card, right? That's kind of a different thing. So something that you could do, and something that could make sense, is you take a trade, and then while you're in the trade, additional conditions are met. Conditions that show you that that trade is even more likely to be a really big winner. And it would have to be something that says, this is not that you win a lot, but that, or not that like you win often, but that the winners tend to be big winners when this set of conditions are met, right? And then maybe it would make sense to add. Okay, so yeah, I really feel like I'm being trolled today, and that's fine. We can delete lots of people. I have no problem doing that. Just hearing some comments over the news squawk here. Oh, by the way, I need to double check here. Did I miss anything on the... Kind of noticing that there is a bump in the profile there at 13.5, and we just came below it. That may just be a coincidence, but kind of stick out to me that I didn't notice that price on the way up. A lot traded there, but they went well through it. You know what? You guys can go and use as many of your alt accounts as you want. I'll hide all of them. Anybody else? Let's go. I enjoy it. You know what? I'm super liberal with my chat. But the truth is I love banning people. It's so much fun. And I can ban people all day if you're going to give me the opportunity. Let's see here. So I'm still reading here. Let's see the I wish, you know, is there a way for me to, like, there's not. See, like, I wish there was a way for me to, like, ban their future messages without me hiding all of their messages, because it was kind of amusing, right? And then, like, anybody coming out afterwards can't see the context, but that's okay. I'm kind of thinking here, do I have... I'm being a little bit ADHD today, aren't I? I got 2 or 3 things going on here in my mind. I had a strategy where I did pyramiding to show how it works, but I don't think that I have that on this machine. I think I'd have to pull it from another folder and go and find it. Yeah, I am bald. I love being bald. Having to deal with combing my hair and all that every day is... I much prefer to just shave it once a week. I'm trying to figure out why the treasuries had that jump overnight. US will sell 70 billion of 5-year. Oh, there's an auction today? Did I miss that? There is. There's a 5-year auction. You know, I don't know if that is Salim though, is he? What were we saying earlier? Like, when were we saying why we didn't think that was Salim before? Was like they were there earlier or something like... I don't remember. But I kind of suspect that this is somebody else. Yeah, it's a verb, not necessarily him. But yeah, I think you might be right about that. I guess this is the kind of behavior that I've seen when, like, guys like Vinny or, you know, like that try and troll the channel, right? But people come in and they try to undermine the channel, which is kind of funny because, like, but like, the tactics that they use to try and, like, undermine the stream or undermine the streamer are things that, like, highly would doubt the audience would be persuaded by, you know? I got thrown out of a live stream for calling out a trade that ended up working by reading volume, and the dude got butthurt. Well, I don't know. So, something that will really irk me is when people try and make the case that, like, because something happened this one time, that's proof of something, right? That's an immediate, like, you're fucking with people, right? I do it the other way around. Like there's a couple of people in the trading community. I gotta tell you, like, you're gonna look at traders overall, and, like, over the long term, like over a 5-year period, let's say, who is profitable 5 years in a row? It's really, like, maybe less than 1%. When you really put it out to, like, that level, like that kind of standard, right? And of those people that make it that long, I bet you that probably half of those got lucky, right? So since COVID, there was a huge explosion in interest in trading content, right? Most of those people have washed out by now. And now what's happening is the couple of people that have gotten lucky, they go and they make trading content, you know? And so I've seen some of these people where it's like I do believe that they probably made big amounts of money, but I don't believe that there's anything actually valuable to their strategy. And these people that I've seen, they make a big deal out of, oh, here's one trade where I made a ton of money. Like, see, I'm a legit trader. Everything that I say is golden. My shit doesn't stink. All of this sort of stuff, because they made like one big trade. And that is immediately like a red flag to me. Like anybody that's really a true trader will know that it's about the performance over time, and that like one trade means nothing, you know? Things must be tough with your business. We're doing it okay. Certainly can't live off of it. Don't even bother. Just ban them. Well, because what happens is like there are a lot of people that will come into a stream and start throwing out breadcrumbs, because really what they're trying to do is trying to pull people over into some other channel, right? So if you were doing that on my stream, I probably wouldn't ban you for it, right? But I would be suspicious of you. Right? One of my favorite experiences that we've had while running this live stream, and I think Uzi might be the only guy that was around back then that might remember this, but there was a guy that come in and start making a lot of extravagant claims about things, and I would be like, yeah, well, I don't think you can prove that. And before you know it, we find out, oh, he's running a trading room, and he's trying to get a bunch of people to subscribe to his trading room. And he actually had a decent number of people subscribe to his trading room from what I recall. And what happened was he got in a trade and was like, oh, it's gone against me. It's okay. I really believe in this. I'm going to add to it. So he added to the trade, and then he walked away. And that ended up being like the biggest trend day of the year. Like, he got absolutely destroyed on that one trade, and he immediately closed the room and disappeared. and that one felt so I don't know, validating. Like, I did not like the things that he was saying. I was like, I really don't think that this is a guy you would want to follow. And then he like immediately went out and embarrassed himself. Okay. I really don't see anything in here that would explain why the treasury's gapped up so hard. Yeah. Doesn't everyone have a bias for enter? How do you enter? By flipping a coin. Sometimes. No. Like the thing that really bothers me, does it really bother me? The thing that I deal with the most is that people have ideas about trading and like what is a good trade and things like that, that they basically picked up from other people, and they really do not have any real data to back up why they would take that trade. So our dear troll today is like a really great example. Somebody saying, well, you know, like if it's a 70% win rate, then why wouldn't you size up? And I'm thinking, well, if it's a 70% win rate, why didn't you trade your full size when you got into the entry? But at the same time, I've never found an empirically like back-tested setup that on an equal risk reward basis is a 70% winner. It just doesn't exist. I really don't think that something like that level exists. In options, there are some things that you can do that will win super high percent of the time, but those aren't equal risk reward. Those are ones where like you make a small amount, you make the premium when you win, and when you lose, you probably lose your account, right? So that's kind of the thing that will get to me. And most people are utilizing some sort of an analysis of price for their entries, right? And on intraday basis, price is mostly random, right? So like, what is my basis for entering? It's usually based on something more like fundamentally based. I don't like to use the word fundamentals, but I've been saying fundamentals because people seem to understand what I'm talking about a little bit better, and then I can kind of further refine it. You know, like piece of news, something that makes me believe that I know what the orders are going to be here this morning before the orders hit, rather than just trying to react to what everybody else does. Or more broadly, I could say trading is not following. Like if everything that you're doing is based on watching what everybody else is doing and then reacting to that, you're not. I don't really think that's trading. But there's a big problem with trading this way. And that is that you really can't create like the kind of statistics that you're talking about there, right? Because I can say, okay, so I took a trade in this particular instance because Donald Trump said something, and so I think that we're going to buy over the next 30 minutes, right? Well, I mean, I guess I can like categorize it and say every time that I take a trade based on news, how often am I good at but the reality is that every one of those trades is unique, right? And so it's just not even the same thing, right? I think most people are trying to duplicate like what they read from swing traders, and then those sorts of things apply. But when we're trading news, it's like it's a different game, right? You get what I mean? And then again, if it's like, okay, I got in the trade and then I'm already up a little bit, because what sparked this conversation was you're in a trade already, it's gone up a little bit, and then do you add to your winners? I don't. Because that the trade is up a little bit does not say anything about whether the trade will continue to run. Yeah, it's a dependent probability. Yeah. But being in a trade and a trade has already gone a certain amount does not give you some dependent probability. You're basically you're adding to a position based on something that is random. No, it doesn't. Prove it. Well, yeah, you'll have a probability distribution, but it will be Gaussian. Like, yeah, this is wrong. What you're saying is, if we've gotten in a trade, if I have a trade, and the trade is completely random, okay? So like we have a strategy here where it picks a random time of the day to take a trade, and then it stays in the trade for a certain amount of time, right? Okay. So then you're going to get a distribution based on the volatility of that instrument, which is to say that like how far these tails are and everything else like that has to do with the instrument. Most of the time is going to be small winners and losers, and sometimes you get big winners and losers. And now you are saying that when I have a situation where I take that random trade and it's already gone 4 ticks, that then I can go from that point, and from that point forward, if I were to start a completely new position from that, I now have some sort of a different distribution. That somehow it's more likely to, well, one thing would be maybe it's more likely to go further, right? Or maybe it doesn't necessarily go further, but like it moves the distribution over a little bit, right? Could be one of those sorts of things, right? And I'm saying that the fact that the price has moved since your your starting point does not affect this distribution. It still ends up being like this. It still ends up being Gaussian. So adding the additional contract doesn't improve anything about your stats. All it does is it makes it so that when you're looking at the stats, right? Like the maximum profit will be higher, the drawdown will be higher. The average, basically what you're doing is you have a distribution like this. And when you add position sizing to it, you get something that's more like this. It's just kind of flattening it out. It's just like spreading the tails out. Okay, so allow me to exaggerate a scenario. If price moved 10 standard deviations beyond a mean, I could say with high probability. I don't actually think you can blow an account. You want to test that one? So I don't know if it's 10 standard deviations beyond the mean. I don't actually think that one's correct. If I understand what you're saying that like I'm gonna take an SMA, and then I'm going to I don't know how I'm going to express the standard deviation away from the SMA, but maybe I'm gonna use Bollinger Bands, right? And so let's just say that we're using Bollinger Bands, and you're saying if it goes, here's the Bollinger Bands, right? And here's the mean, and then if price were to really go like this far above the Bollinger Band, that there's a really strong chance of it coming back into it. I'm not convinced that would actually be true. A trend like that, I think, is likely to just stay after that, if not keep going all day. Like I'm not sure you could get that many deviations. I don't know. You give me the math and I'll backtest it. No, that assumes the probability isn't affected once the price has gone for or against your position, which I just told you isn't true, but it is true. It is true. Every backtest that I've ever done shows that. I really think, Taylor, that you believe something that you don't because it just seems like natural and common sense to you. But if you actually did the scientific research on it, you would find out that that's not true. Like, I understand why you think that that's true, but the back testing that I've done says that it doesn't work like that. Yeah, you have the proof. Okay, let's see it. You give me a strategy. We can throw it into the back tester, and you can show us how that shows that that's not the case. Right? If you are right, then you get a cookie. Yeah. Or no, in this particular case, I don't know if it gives us enough to start a hedge fund, unfortunately. So all I can give you is a cookie. Has to be worth my time. Well, listen, man. If you're not willing to like put up, then why are you coming in and saying anything in the first place? Okay. Yeah. Goodbye. That's fine. If people aren't willing to show their evidence of things, then there's really no valuable. Yeah, it's predictable AF. It really is. I think it's funny. We can test this other thing because we've now introduced two things, right? Because loan account has another theory about the amount of mean reversion in things, right? So we have random baselines, timed exit, right? And so I'm going to open that strategy up. Okay, and then should we put it under random baselines again? I guess. New strategy. Delayed rand entry. Okay. Going to copy everything that we had from this one. Okay. Change the name here. Okay. So on this one, we pick a random time, and then if it equals that trade time, then we take the trade, right? Instead, we're going to do something like we're going to pretend we're going to tell it to just keep track of that price. And then if it gets a certain number of ticks, then we'll tell it to take a trade. Does that make sense? Okay. So I will need to add protected double initial entry. What are we going to call it? This might be really confusing for anybody coming in back and looking at the strategy later, but I don't really know how else we're going to do it. Okay. And then we're going to say initial entry equals close of 0, right? So it's not going to enter into the trade.
Block buy.
Okay, but we are going to have a Boolean that says protected bool and protected bool initial entered. Set that to true too. what did I call it? Initial entered. Let's see here. If initial entered underscore if underscore direction equals 1 and close of 0 is greater than initial entry plus what do we have here? Okay, Ninja script property public int add position. So this will be number of ticks at which we want to add to our position, right? Plus add position times tick size. Right? So basically what we're going to do is we're going to say we pick a random spot and then we're going to wait for it to go in our favor a little bit first before we get in. And then does that change any of the stats, right? S&P 500 was down before the open, but they seem to be recovering here. We don't want this part. Oh, I don't know. Blown account. I would say the probability is higher than 75% it reverts back to the mean. The question is when. Well, you have to put some sort of a time frame on it, right? In order to test it. We're going to say that it's going to come back within several days, or it has to come back within a certain volatility distribution, right? Because like for me to set stops and targets and things like that, right? Isn't your bell curve measuring S standard deviation? So then isn't the probability can be measured correct? I'm not sure what you're getting at. We can run a back test. Yeah, we can run a back test. Did I not put it up there? Initial. There we go. Try that again. Apparently, my fingers don't know how to spell initial. Keep forgetting the second I. That's kind of funny. What do you got here, Dave? Okay. Eastern has 5551D and 7090D change. Next rotation gets one tick lower with 52 in the bid. The nuance I would say is it appeared when price went below that previous rotation I was expecting booked a pull and let it fall. However, only 52 and 2195 and 2039 was able to trade there. Maybe. I mean, so the thing in this point is like we can look at the volume. We want to be able to explain why the price moved the way that it did from the orders, right? But that isn't necessarily giving us anything that will predict orders, right? Okay. Okay, so let's do it in the S&P 500, and let's do it when it's gone 10 points in our favor, perhaps from that initial point. I suppose that we could add a, like, if it goes against us 10 points, then we cancel the trade as well, right? So that would be 40 ticks. Let's start with doing it this way first, though. Okay, I will do a year. A year is probably good enough for this particular case. But the main thing that we got going is that we want the seed. Come on. The seed to go from like 0 to 1,000. Okay, let's see if it works. Well, so does the paid Discord allow you to text you? Well, it will just send me a private message. There's no difference between the two. Send me a private message. Okay. Yeah, it looks like it's working. Except for that it's not taking... No, there's something wrong. If direction equals -1, equals is less than. Are they all like that? It's actually giving you a pretty good Sharpe ratio on some of these because it's only taking longs, I think. Yeah, why is it only taking longs? Oh, that's interesting. I don't even need that bit where it says like direction equals 1 because it's doing the same thing in both sides. Okay, sure. Oh, wait a second. Oh, log, debug, save history. Is it just too big? No, this is definitely a bug in my code. Oh. Oh, wait. I see. It's not -1. It's 2. Probably if it's 2, huh? Yeah, okay. There we go. Okay. So, we're going to keep 1,000 results. Run it. Your paid Discord does it a lot as it shows no permission. Oh, I don't know what that means. Just when you try and message me? The reason I put 12 SMA in my scenario. Oh yeah. So going back, when you say standard deviations of what? Like daily price movement, the standard deviation of price over the past X bars, the standard deviation of the difference between the price and the moving average. It looks random to me. So let's come back to this. Brand baseline, not delayed. Timed exits. ES. 1 year. Seed 1 to 1,000. You know what? I should have done it in a separate window so I can open them next to each other, huh? It'll probably make me like move to new window. Yeah, it'll be rerun. That's okay, I guess. I guess that's okay. Okay. I'm just gonna remove the log here on this so that I can size these and show log. There we go. Okay, and okay, so what does it do? It just increases the spread of it, right? It's just like this distribution. Do you want me to actually go into? Yeah, we will. We will. Hold on a second. Is it actually doing it? I think I might have crashed. I think I might have just crashed Ninja Trader because that window's not. Oh, that window's. It's just that window, I guess. Loan account just says the 12 SMA. Okay, so I have a 12 SMA. Okay, what is the condition for how far it's away from the 12 SMA? Right, so it's going to be like if close of 0 is greater than SMA of 0 plus a number, right? And what is that number? Oh, did it do it that time? Yeah, okay. Export. Let's see here. Let's put it into our R Studio folder. Let's make it a CSV file. That's a little bit easier. What are we calling this? Size up 1. Save. Okay. What's it gonna call it? I might need to change the names of these. Let's open it up in new shell. No, that's not the right one. This one right here. Good. Oops. my data too. Blue. Oh, that's funny. I call it size up one baseline. I don't think this is going to quite work correctly because I forget how to draw multiple plots on a R Studio. Oh, hold on a second. I think I know how to look this up. No, hold on. No, that can't be right. Is it really just lines? Oh, okay. Oh, that's weird. That's actually way not what I expected. So what happened was, so the blue, oh, okay. Total net profit baseline. Or let's say my data baseline. There we go. No? Oh, I mean, because I have to run the whole thing. There we go. Okay. So the baseline is black. Let's see. How can I explain that? Maybe I'm wrong. So I think here, this one, like just doing the first one, Or like, let's just say, hold on. Can I just do that? Oh, actually, that's not what I want. Oh, wait, why am I confusing myself here? I'm having a hard time keeping track of which line is which for some reason. Okay. Wait, so then why, when you put them on top of each other, do they do that? Oh, okay, because this one is centered at 2000 and this one is centered at 0. I think this is... So, part of me wants to say, so I expected, my theory rather, was that the blue line would be taller and like wider. It wouldn't be taller, but it would be wider than the black line. But it is wider, but it's also centered around this 20,000. So what's with that? And if we were wrong, well, okay, so maybe part of it has to do with the market. But there's something about this that makes me think that there's a bug in my script. So let me double check here. Boy, okay. Let's see. So the thing that kind of is weirding me out about this is that these both look pretty Gaussian. And on this, how is it that the ones that are performing the most, their percent profitable is much lower? That can't be right. There's a couple things in here in this that I don't think make sense. What am I doing wrong here? Let's double check. What are we doing? Okay, if it's the first bar of the session, we pick a random time. Here's the time and the direction. Then when we get to that time, we set an initial entry. And we say they were entered. Initial entered equals false when we're on the first bar of the session. Okay. If we're entered, then and we're looking for long, then we wait for it to go however many ticks away from our thing. Okay, let's try something here. What's this one? Delayed random entry. Right. Seed. Only go to 100. And add position. Go from 10 to 100 by 10. Spoos sure are moving around a lot right now. CB consumer confidence in 98 spot 3 versus 102 spot 5. And Richmond Fed composite index 6 versus an expected -3. The treasuries do appear to be moving a little bit higher here as well. Okay, that makes even less sense. It makes more when it waits for it to move 10 bars versus 40 bars. This one right here, you see that? 531 trades. That's not working. Right. Because exit bars is supposed to be 10. Exit bars is not working. That might explain why. Let's see here. Like that. So I think what's happening is the time exit was not getting triggered. And so it was just holding them for all the whole session. And that's why the distribution was pushed over a little bit, is it was reflecting the tendency of the S&P 500 to go up. And so if you're holding it for all session, then those ones where you know, it's turning it into buy and hold. or turning it in the direction of buy and hold, let's say. So now if I come to the chart, that's still not working correctly. Random short. Random. Wait, is that one a random short? Random short time exit. Okay, but that time exit is not right either. Because exit bars is 10. If we have a position and exit bars, which is 10, 10 is less than current bar minus the entry bar. So if we are like at bar 500 and the entry bar was at bar 490, right? Or let's say let's say 490. Then current bar minus entry bar is 10, and then we say is exit bars 10 less than 10. It's not. Then at 501, then it would be 11. And then is 10 less than 11? It is. We exit. Time exit. There should not really be very many, if any, trades in here. Well, or another way of looking at it is in the summary here, the average bars in a trade should be 10. And it's not. And in the random baselines, open in new strategy analyzer tab. Save history. Average bars in a trade is 11. That's correct. So what is it about how we change things that it's no longer working? Exit long, exit short. You know what? I'm gonna take a quick break. I got to think about this. I don't know why it's not working. I think I've probably run into one of those strange situations where for some reason NinjaTrader doesn't use the exit long correctly. Oh yeah, sorry, I turned the microphone off. So the code between my timed exit and my delayed random entry. So basically, this one it enters at a random time. This one enters after that random time when prices moved a certain amount in favor from that time. But for some reason, it's not doing the random exit bit. Or not the random exit, the timed exit. It's supposed to hold it for like 10 bars. And that's not working. It's not getting out. And if I come back to like the trades themselves, well, there is buy to cover. But then that's probably like buy to cover on the next day. 8:55, 9:07. Oh, well, so hold on. I think I know what's going on. This is getting called all the time. And position dot market position equals market position dot flat. That's probably what it is. This is probably getting called over and over and over again. Better. Much better. Okay. So let's do this again with just 40. And the seed in 1,000. Run. I feel like it took me longer to realize that's what was going on from the code than it should have, but that's okay. Was not in a place. It really made more sense that the problem would be that I've got the names on the shorts wrong or something like that. So I had to eliminate all of those possibilities before I could see the possibility that, oh, maybe it's updating the current bar over and over and over again. Or the entry bar over and over and over again. Yeah. Okay. That is still actually a little suspicious. That what I'm seeing right there. I have to come back and doesn't like there being spaces in the names. There probably is a way to do it, but I'm too lazy to search it up. So I just come in and change the name in the thing. Okay. Trying that again. Holy crap, all oh yeah, I have this. Never mind. Okay. Well, let's come back and double check these again. Save history. All right. Now it's going over and over and over and over again. So that's not right at all. I wish I had looked at that before I did all of that, huh? Okay. Protected, bool. Size up, entered. Better. Better. Summary. Bars and trade 11. Okay. Jeez. Okay. Much more confident this time. I wish I had done. I was a little bit foolish to run the whole back test before going back and checking the entries, right, and seeing that it was Xing. Because basically it gave me like the same results because it was just getting into the trade over and over and over again instead of one trade. So that was wrong. See, the result that it's giving you right here is basically saying buy and hold. Is what it's saying. Buy and hold is a pretty good strategy. Yes. Okay. Hopefully it doesn't complain about that. Okay, we're good. Oh, yep, okay.
Order filled.
Oh, it just took profit. It just took profit on the trade that it took earlier. Hey, that was a pretty good one. It got a lot out of that. Made like over $100 on that. We still have to get into why is that one not exiting when it's supposed to. But I digress. I think it's a dumb error. Okay. Oh, did I not save over here? Right. Okay, there we go. Uh-huh. Okay, well. That's not what I expected to see either. So, hold on, the news squawk is talking. So the test was, should you add to winners? So what we did is we said instead of like taking a trade and then once the trade has gone a certain amount, we add to the trade. We're just going to say you never took the first trade and you only took the second one, right? So that would simulate only what happens with the second contract. Okay? And when we see that, what do we get? It's the difference appears to be negligible. Over a year's worth of data, I'm gonna say that's negligible. Now, when I was saying, that it would kind of like steepen out, that is if we took the two contracts. But if we took if we did two contracts and we did one was all in, all out, and the other one was we only added a little bit, the all in, all out should make and lose slightly more. So it's my point was it's a risk-taking strategy, right? Basically, your like net profit overall can be a lot higher by pyramiding. But it doesn't change the skew or the center of that distribution. I guess we would need a little bit more data to really show that it doesn't change the center of it, because the center of this one is a little bit slightly over. But you get my point. I don't know. Does that, do we understand how adding two trades affects things? Adding two trades would only make sense in specific situations, like when the market is expected to make big moves. Yeah. So it's like, if I took a trade and I'm in it, and then while I'm in it, I get an additional piece of information that suggests that that trade will be a really big one, then it would make sense to add. Yeah. Well, if there's like an additional signal on there. All I'm saying is the fact that it moved so far in your favor does not change anything, because prices are martingales. So the price moving does not change the distribution of the result that you're going to get on that second contract. You're not more likely to make money on that second contract, or that both contracts will end up making more once you've gotten into the second. It doesn't do that. What it does is you're sizing up, so you can potentially there is a point in pyramiding. Like, here's where pyramiding actually like really makes a big difference, is when your size is so much that it moving even one tick increases the amount of margin that you have, enough that you could add more contracts, right? And then that really allows you to like here is a graph of how far price went and how far you made. So this is the change in price, and this is the change in net profit or whatever, right? And normally it is like this, right? But if you can pyramid, then you can turn it into this, right? That's why you do pyramiding. But the pyramiding doesn't change the probability distribution. Your sample strategy would need to trade only during those conditions, so you might need to enable it only when the market is open. Well, no, what do you mean by that? The way that this strategy is working is it's entering at a random time. It's entering at a random time. So the baseline one is, that is the black line here in this graph, is pick a random time and hold it for 10 minutes, right? The blue line is, instead of entering the trade at that random time, we know what the price was at that time, and then we wait for price to move a certain amount away from that. So now let me come back and show you something else here on this that is just interesting. So here, instead of doing it 1,000 times, I'm going to iterate over the add position bit. Okay, so 10 to 100 by 10. So what that's going to mean is that, you know, the market has to move further before it will get into a trade. And that will kind of change the width of the distribution probably. That, like, there has to be a certain amount of volatility for it to have even gotten triggered into the trade. And so when, you know, the amount that you make or you lose on an individual trade increases because it's trading in higher volatility. It's filtering out. It's filtering into higher volatility, essentially. But it still isn't going to change the skew or anything. Because currently your strat is also... No, that's not true. It is only taking trades during the most active times of day. Because it basically... So what it's doing is it's picking a random number, which is like a number of minutes into the session that it will take the trade. Yeah. So where is that? Right here. Today's trade time equals start minute, start second. So going back to the strategy, start time. Oh, where is it? Somewhere in here, there's going to be a start minute, stop minute, right? Oh, wait, did I read that correctly? Start minute, start second. It is 6:20. There it is, the start time right there. It's hard to find. So it's saying starting from when the treasury's open. We could start it from when the S&P 500 opens. I don't know that. But I think that there's a lot of good trades that you can take before the market opens that are interesting, right? But it's not trading like after them when like nothing's going on, right? Okay, so add position. There you go. Looks pretty random to me, except for there's when the add position is really small, maybe it ends up taking more trades. So basically, these ones, there might be a few situations where the range isn't that much, and so they don't take as many trades. But basically, when you look at that on the side, it's still random, right? Well, that's not too hard to change. 7:30. But basically, like, what is it doing? You're taking a random entry, and then you're adding a little bit of something on top of that. Okay, it has to go in my favor a little bit first. Does that change anything? No, it doesn't. It's still just random. Why? Because prices are martingales. The best prediction for what the future price is going to be is the current price, essentially. And you can't say, oh, well, it already moved a little bit, and so it's likely to continue to... Not on intraday data. It doesn't work. Doesn't work. See? So, yeah, I see why retail traders would think, oh, okay, but like if it's already winning a little bit, then I should add a second trade, right? But I'm just saying, because prices moved in your favor a certain amount does not mean that it will continue to move in your favor. That's a trap. Yep, almost exactly the same results, in fact. Probably because that's not going to change the directions that it takes. And, like, it's still going to take the same number, like the random number generator is just going to be offset a little bit. And probably what's really making it win or lose is like when it trends one way or the other during that day. Now, there's another thing, which is like the exit bars, and you could increase. We could do that, and you could say, let's hold it for 30 minutes instead of just 10 minutes, right? But all that's going to do is increase the width of the distribution, right? You can make or lose more because you're holding it for longer. And there might be, as you increase that time, more of the S&P 500's bias to go long will probably start to creep in there a little bit too. Well, that's going... News Squawk has been talking a lot today, but I'm not really seeing anything all that significant. Okay, there you go. So see, it's wider, but it's still just as random. You can't, well, like, so what yeah, okay. We have to have this discussion again. Okay, so what we're saying is A equals, I don't know. Is that profitable? That's your entry conditions, right? B equals not profitable. Or, I wish I could, what would be a word that would say? Can we just say -1? -1 means it doesn't make money, okay? So, or no, let's say 0. It doesn't lose money, it's just B is 0, okay? B is random. B is random. B is our exit strategy, right? Or no, so sorry, B is what? I am having a hard time today, guys. B is our adding to the position, right? B is adding to the position. So if A is random and B is adding to the position, we know. Okay, so actually let's do it like this. A equals 0 and B equals 0 and A plus B equals 0. Okay. So now you're saying that we are going to introduce a C. And we're going to say that C on its own also equals 0. You're saying that there is a situation where C plus B actually equals 1. Is what you're saying. You're saying this entry signal or this adding to it on their own, they aren't profitable, but somehow when you add them together, some sort of magic happens and all of a sudden it does become profitable, right? So I'm not saying that it's impossible. We can test it, right? But I've never seen that happen. What instead we do is we isolate things. So we say, okay, is there an actual edge to this thing? Yes, there is. There's an edge to this thing. And then we take all of the things that we can prove that there's an edge to them, and we add them all together into one strategy, and they all kind of add up on top of each other. That's the way that we tend to do it, right? You need to check if price movement is probably stabilizing to favor direction. My take on checking stabilizing direction is ATR must decrease. Well, ATR 30 minutes must increase. Okay, wait. So that's interesting. So you're saying that wouldn't that always get it in when it's on a pullback of some sort? But that is something I think that's a different question from, like, does the adding to it matter? Because we could probably test that with it, like, just a completely different entry conditions of sorts. But should be the opposite of a pullback. Oh, the manual trader may not add on every trade. There might be criteria that warrants an add. Well, yeah, that's where I'm saying that again, the price having gone in your favor a certain amount changes nothing. Some other signal happening while you're in could, and then that's a different thing, and then you would add to it, right? But adding just because it moved in your favor doesn't do anything. It's just adding risk. That's all it does, is it adds risk. It doesn't change anything else statistically about your results. I think what Frederick is talking about is a slightly different thing, right? It's saying, and I don't understand when he's saying like the ATR is increase on the 1 minute is decreasing, but the ATR on a 30 minute is increasing. I'm having a hard time wrapping my head around when that would happen. I would think that it would have to be like a consolidation. Is like, ATR here would be moving down. Yeah. And then you're saying only add when that condition is happening? Or is it both? Like it's moved 10 points and that condition is happening? In other words, let's see here. ATR short. ATR long. ATR short equals ATR of 10. ATR long equals ATR of 30. And is falling ATR short and is rising ATR long. Right? Let's come back here and change this back to 40. I think 10 points is just a good round number. Go back to 1,000 seeds. I'm not really sure how this will affect things. I suppose the null hypothesis is that it's going to be just as random, but that's where we're looking for those ATR conditions and for price to have moved 10 points. In the meantime, I was pulling up these old strategies I had based on Bollinger's. Okay. Yep, that's the one that we want. Should have reset my DOMs a while ago, huh? And knocking on the door still. Okay. Doesn't look any different to me. And let's go and make a distribution of the profit anyways. Oops. Did it not do that? CSV. Oh, I see what happened. There we go. That one actually does look like it changes it a little bit. Let's go back here. We'll do, instead of having it baseline, we'll have the baseline be size up 2. Size up 2. There we go. So we can compare those two. Yeah. So it seems that what you've done with the volatility kind of it flattens out the curve a bit. So that's a way of filtering for trades that are more risky, I think. ATR 30-minute is more representative when it's pulled from a higher time frame. Oh, you mean like just use 30-minute bars or something like that? I don't know. I think that kind of gives us the gist of what should happen, right? Because you're kind of, yeah. Anyways, I want to move on to the Bollinger Band thing, right? So, Bollinger 2 strat. AMI multi-Bollinger. Okay, so mid-band, offset, smooth, base period, deviation period. So we have this over here. Lizard indicators, AMA, multi, Bollinger. Deviation type. Standard deviation. Oops. Oh, where does it get offset? Mean absolute deviation. Oh, I can change it. Okay, cool. That does. Bollinger 2. You said to use a 12 period. SMA. Offset, use standard deviation. The deviation multiplier was 10. You said 10. That's really big. Deviation period the same. We're fading it. Stop target. How do I have that stuff set up? Set stop. Okay. So we want the target to be 1, but we can set the stops to be whatever we want. If we're going to do it on the S&P 500, let's make it 10 points. No. Oh. That's not looking too good. Okay. So here is an example. Oh wait, except for that, I don't think that one really should count as an example, should it? Cross above. If the high crosses above it, well, okay. It did cross above it, right? The high was outside of the Bollinger Band briefly. Okay, so then the next bar we take an entry, and guess what? It goes nowhere. which is okay, that's one example, but that's what I would expect to see happen most of the time. If we come back over here to our analysis, and granted, we're only looking at a year's worth of data, but if we go to the MFE, can we see that there's like a clear line where a lot of them we are making money? It seems like that 40 ticks is too far out. Let's try 20. Yeah, that's a little bit better. The numbers that I'm getting aren't super very good though. But that's enough for me to want to go back and look at a further time period now. So does that make so I think that the claim was that if it's going more than 10 standard deviations away from the moving average, that there's a very high probability that it's going to come back down. Okay, well, we are using a stop and target sort of a thing, but this doesn't support that idea. This kind of supports the idea that after the price is changed, that price change is permanent, and that after that point, the best prediction for the future price is the current price. Still suggests that prices are martingales. Julian says, after I wrote the Z-score, I tried some of those no edge. Yeah. See, like Z-score seems to be a good way of catching like when there should be mean reversion. But the issue is that when there's a large meta order coming into the market, right? There's going to be a short-term mean reversion period like this. And then after that, that change is permanent. And in order for price to move back down, somebody has to take it the other way. So if you're always taking the mean reversion, you're going to eat these and just get destroyed. So that's why that doesn't work. Well, I spent all this time backtesting these things. I didn't get a very good, like, why is this not working? I suppose I have some time. My wife is not working today, so let's see here. I gotta check my calendar because I do have some stuff today. I have stuff every day this week. In fact, it's getting a little bit crazy. Yeah, and stop loss eliminates. Yeah, you know, like a stop loss isn't really the best way to do it, right? A time exit, I think, is a better test, but because once you put the stop loss on it, so like as to whether or not the entry signal works or not, okay, but like once you start putting the stops and targets on it, like set stops and targets, the results that you get are mostly a result of the volatility. So, you know, any cumulative delta or deltas? Well, this is based on market order imbalance. It's kind of a similar thing. So the issue, D, with like you writing an algorithm using cumulative delta is you're going to go and say like, okay, cumulative delta has changed 10,000 or something like that, right? But that might be situational, how much I'm going to be looking for, and like what's the number that I'm looking for. That's why I think that the market order imbalance is so interesting, is because it actually creates an oscillator with points that you can specifically point to. Here's where we want to take it. I digress. Why does that strategy not work correctly. Simple market order imbalance. Yeah, that's probably why exactly. So I think that Degenerate Gambler is using, one of these is using advanced base strategy, I thought. No. Nope. What was using it then? Scale out? No. Time stop and reverse, maybe? Oh, I can't remember anything that uses it. Black, maybe? These were some tests that didn't really work out. Okay, I'm gonna have to do this the hard way. Where's my arch? Oh, that's not right. Oh yeah, there does work. Well, the only other one that's using it is Fourier Trend? Really? Okay, but in here, if I can trade. I think it's that. I think that because I'm completely overwriting on bar update, I have to check if I can trade first. And that's why it's trading at all times. Although my backtest kind of suggested that it was only doing... Oh, but maybe that was because I only was giving it data during those market hours. That might be why. Okay. So we will disable the strategy for now. It is not in a position. It did well again today. It did actually. If we had run it with the current settings on Friday, it would have probably made, I don't know how much it would have made on Friday, but it made about $100 yesterday, and it made about $100 today. So it's doing pretty good. That one's doing pretty good so far. Okay. Still working out what the difference is in market order imbalance. Backtests still seem off compared to live and playback. Well, I think that the backtests might be slightly off from live. So the market order imbalance value shouldn't change, but it depends on how you're doing it. So make sure you install the latest version of the paid indicators, okay? I updated that too. If you go to the speculatorseth.com and download that. But basically what happens is this. Each one of these data series get output to a file. And then when a bar starts, it asks, do I have a cached value for this bar? Which if it's historical, do I have a cached value for this bar? And if it is, then I just use that cached value. If there's not, and I've been told to use tick replay data, then I calculate the value based on tick replay. Okay. So once the value is cached, it should just always be the same value. So if you're coming in and like, now there are some things. So like if I come into the indicators here, right? Because maybe you're going to have the indicator on it multiple times. Then there's going to have to be different files with different names, right? And it uses the name to find it. So you could have something like that going on. Like this one that I have on the chart, I'm using the GUID file name, the GUID style, which basically means that I have to pass this GUID in, right? The elite indicator package is a 404. What? No, I tested that. Make sure you hard refresh. Like make sure you refresh this page and that it says like last updated 2025-02-25. Download. See, it's giving you a real file. But maybe if you have this cache, you might have to do like Control F5 or something like that. Or is it Shift F5? I can't remember which one it is. Okay, anyways. So with this one, you have to pass the GUID in. Oh, I see. Oh, uninstall that HTML. Oh, hey, hold on a second. Yep. Okay. 3410. Okay, good deal. There we go. That should fix that. Okay, how do you do that programmatically? Okay, so what you can do is this. So the default file name, let me just explain. The default, if I go into mine, NinjaTrader 8, saved. Okay, if I go into mine, the default is going to be the instrument name, the time frame, the name of the indicator, and the date. And the thing that is convenient about that is that it will use this. If I add it to this chart and then I add it over here to this chart, it will use all of the data that the first chart saved because they're using the same instrument and time frame and date. Right? So what you should be able to do is like create a chart that's really, really long, like it goes back 365 days or as far back as your data broker will let you do. Turn on tick replay and then add the market order in balance to it. And then you should then end up with, you know, a new file in here for every day with all of the values, right? And then it would always be cached. And then if I load it up on another chart, I should see the same values, right? And same if I went and I loaded it into a strategy. But I guess the thing would be like if I loaded onto this really big chart and I say turn on tick replay and then add the indicator to it, it will calculate the indicator. I could then go and have a different chart that doesn't have tick replay added onto it. add the indicator, and it will still show me the historical values, even though it doesn't have tick replay on because it's pulling it from the cache, right? But there might be some situations where like you have the indicator on there both, like maybe you want market order imbalance on there twice, but you want different time frames. You want like 10-minute and 30-minute, right? Then that's where I would use the GUID one. And then it's going to create a file with the name. Oh, did I already close the window? Or is it back there? No, I closed the window. Anyways, it'll be the same file, but it will have the GUID in the front of it, right? And what you can do is like when you add the indicator to the chart, you can just set the GUID equal to what you know the GUID to be, if you want to do it that way, right? So another thing that you can do is, and again, you would have to set this variable if you were doing it programmatically. Or actually, we'll come back here to this. This one right here. Okay, so I have right here SPS market order imbalance save tick replay equals true. But we can also say underscore imbalance dot GUID. Is it? What's the name of the property? I hate it when I have to like search for things like that. Oh, ID. Okay. Cancel. Imbalance dot ID equals new GUID. You know, blah, 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 blah. Right, or I could have a string that sets the GUID and I pass that in there like that, right? I could do that. Something like that. So yeah. One of the things I'm struggling with right now is that like what it's doing is complicated, right? And once you get to the point of backtesting, you do have to understand a little bit about what it's doing with the caching, potentially, to use it correctly. I'll verify if the yeah, so it really shouldn't be 0. But what could happen is this. If you like let me close that and not save it. And let's come back out here. CD Ninja Trader, CD saved. Okay. And then we're going to say ZN 1 minute dash market. Oh, come on. Okay, so here you have like, this is going back all the way to September. Okay. But you come in here, right? Like there should not be zeros in here. Actually, you need to look at a newer one. Okay, here we go. 1 minute. This one. Okay, here you go. Because this one gives you the column names in here, right? Time, imbalance. So with the new, and you're probably, when you download the new version of the indicator, Julian, you're going to have to change things because I changed it from a decimal to times 100. So you'd want to be like, 60 and 40 or something like that, right? Okay. But that imbalance should not be 0. It should not be 0. Now what you might want to do is maybe you had some settings wrong or things like that, right? Come in, delete the saved files, reload the thing so that it calculates everything from tick replay, but from scratch, right? And then maybe you get better values in the cache, right? But, and this is all the information. It keeps track of the current buys, current sells, the running buys, running sells. So this is like the buys in that bar. This is basically the delta in that bar, and then this is the running buys and sells on the what do you call it? The window that you're looking at, right?
Block by.
And then this last one tells you whether you recorded it live or it was based on tick replay data. So if we come in and we look at this one, it probably should be 0 up until a point, see? And then when we come into our session, when I turned the machine on, from there on out, you can see that then we're using live data. It calculated these ones live. Cool? I think it's cool. So, oh, yeah, and what was that? I was trying to tell you something else, and I kind of got myself distracted. That's funny. I can come in here and I can say underscore imbalance dot log equals SPS log level dot debug. And then when you're running things, it will spit out tons of information in the output window about like, well, I'm not showing anything, but I'm just showing you the output window. But it will show you things like, I loaded this file, I tried to export this file, and all that sort of stuff. So you can get a little bit better of an idea about what's going on underneath. That might help you debug what the problem is. Or that would help me debug, because at that point, then you should be asking me about it, right? Okay. So, man, that session went by so quick. So we back-tested 2 things. We fixed the problem in our strategy here. And we banned some annoying people. So I think that is pretty productive. I feel like we were pretty productive today. Don't save. Okay, so oh my, dude, the spoos came back. Or no, the treasuries came back. Oh, not that much. Not that much. There is still not really a clear driver behind the treasuries move, though. Let's double check on Zero Hedge. Was there anything? Goodbye, mom and pop. Retail traders sell record 1.1 billion in the first 2 hours on Monday. Really? CTA liquidations begin up to 193 billion for sale. It's really starting to look to me like that the market has turned, like, regardless of what was kind of the impetus for it, the internals and everything have kind of shifted around into a spot that it kind of is now starting to trigger endogenous selling. So the question at that point is, how far is it going to go? You know, when you have problems where, like, when you've sold and the market has lost a certain amount of value, that then triggers other people to sell, or it triggers other problems, and there's kind of like domino effects that start going on, right? Because if this were to turn into a recession, somebody might say, well, it was Donald Trump's recession. But then somebody else might say, well, but it was Biden's economy, really, because Trump had only been president for a month. Well, but it can kind of be both, right? And it would be hard to sort out whether the things that Trump did actually kind of caused it to flip. Because if it's like, at a certain point it's endogenous. That part is just the state of the market, right? But that doesn't mean that they weren't like, that means that Joe Biden dug a big cliff there, but that doesn't necessarily prove or not prove that Donald Trump pushed him over, right? But for now, the thing that we got to sort out is like how far it's going to go. And sounds like that there is some money starting to come in on the short side. It's very curious that there is that much retail selling. Especially since, my gut reaction is to do the opposite of whatever the retail is doing, right? Was there anything else on there? CIA confirms secret kink chat room. Oh boy. Ukraine already lost the war, but the EU hasn't figured that out. The longer Zelensky holds out, the more territory you could. That's probably true. I mean, it would be small amounts, but I think now is probably a good time to try and make a deal. Fortunately, deal probably will mean giving up some territory. Home prices accelerate to new record high in December. Futures drop as momentum massacre crushes Bitcoin. Oh, dude, I did not notice. You know what? Oh, that's so funny. When we came in on our charts this morning to look at all of the different assets, I got to the 6J and I stopped and I didn't look at Bitcoin. Holy shit. Oh my gosh. Guys, I could have spent the whole stream trashing Bitcoin and laughing at it going down, and I missed it. Oh my gosh. And instead we wasted the whole stream doing things like backtesting and stuff. Oh my gosh. Oh my gosh. That would have been worth some giggles. How bad is this in Bitcoin? Pretty fucking bad. Holy shit. Talk about a gap. Wait, is this gonna be an island? Oh, that will be very interesting if that's what ends up happening, guys. Oh my gosh. Okay, so there's a technical pattern that is not very well known, but is kind of interesting, called an island. And an island is basically where you have a gap up, it stays up there for a while, and then it gaps back down. And so what the technical analysis, and I don't believe in any of this, but it's always interesting when they're happening. Okay. So there's going to be your trend line, right? And so the expectation is now that it's broken, that you should be able to enter on it coming back like this. And then maybe it might come back to this moving average and kind of continue on. Right. So the problem is, okay, prices are martingales. This isn't a very effective way of looking at the markets. Even, like there's momentum and stuff on daily bars, but like chart patterns are kind of like inconclusive. But the Bitcoiners totally believe in this shit. They totally believe in it. So I wonder how bad that's going to get. Because when they start selling like that in Bitcoin, it can get so ugly so quickly. Of course, tomorrow they could just come up and tomorrow they're right back above the line, right? Like, that's entirely possible. But before the end of the week, if this continues, then before the end of the week, you've basically erased the entire, like, Bitcoin ETF run, right? I mean, some of this was that too. Some of this was maybe that too. But this was really like after the release, right? When did it get approved? Oh, on January 10th? No, that can't be true. Oh, January 10th, 2024. Okay. So it was essentially over here. Yeah, it was over in this area. Was the ETF rise. And this rise was, I guess, Sailor, right? I think was the main driver from that. If we come back into this, and then if we get below 5,000, then it would really start to be carnage. Or sorry, 50,000. But that's a long. Let's not count our chickens before they hatch, right? Oh, hey. But that's the other thing is, well, just two other things we should look at before I get going here. One is how data window is moved. Got it. Okay, but I don't want to see that. So, okay, there we go. Man, Reddit is still getting savaged like basically every day too. MSTR. MicroStrategy. Ooh, baby. Ooh, baby. 250. 250. MicroStrategy states the average purchase price is 62,000. 62. Let's just put that on the chart here. Okay. Drawing tools. Horizontal line. Double check it. 62473. We know one. Of course, this drop could be Michael Saylor decides to buy even more and raises his average price even more. Could make it even more ugly. Okay, so that's his average price. Well, they sure have a lot to drop, but you know, that doesn't make me I wouldn't feel too confident with that one, you know. And why is Bitcoin dropping? Because all of the sudden retail traders think that we're about to have a recession or something, like the market is turning. I don't know, man. But I come back to, so let's leave that one for a second and come back to the S&P 500. Okay, so we have to add this tool that we've got, which is which is Fibonacci retracements. So I'm going to set the start Y to be 0. And then the levels that I'm going to do are going to be 90, 80, 70, 60, 50, 40. Is that correct? Oh, I think I need to go the other way around. It's actually, I actually want it to be like this. 10. Yeah, okay. Headed backwards. Okay, so I could see this move being like a 10% pullback sort of a thing, right? This scenario where you get 20, 30, 40, 50. Okay, so like a full recession could be down into the 50%. Wow, that's 1,000 days. Okay. Oh, it's not 1,000 days. That's just as far back as my data will go. Okay. You could get like 50% pullback in a recession, but I bet you that it's probably 10 to 20%. If that's really what's going. But retail traders are trading like that they think a recession is happening. So that's interesting as well. Okay. Well, guys, I think it is time for me to get going. It's like most of you are already gone anyways. But I will see you guys tomorrow. This is interesting. You know, when we start moving like this on like a light news week, those can be really significant moves. So we definitely want to stay engaged tomorrow. I'll see you guys then. Stay excellent.